G'day Internet, Max right here, and just some fun things with updates around Bitcoin. We're going to talk about our trade. I've moved my stop loss. I'm going to share that with you. The trade's going very well, by the way. Next, we'll talk a little bit about the news, and we'll touch on some issues. There's a couple of things happening. There's the difficulty rate and the hash rate will be dropping. What that means, I'll give you some background so you understand what's going on there. And also, there is the Grayscale Trust. There's a 6-month expiration coming on that. I'll talk a little bit more about that, explain what's happening there. You know what? I'm also going to talk a little bit about Tether. There's been some question marks raised over Tether and what's the consequences of that. So let's get into it. Okay, so let's get into this trade. So for those of you who are new, actually let's update this. My goal was to get in here, but I was asleep and I actually got in here. So this long position is actually here. And now that we've gone up and we've seen our way clear, as predicted, we've met resistance at this line. So there's every possibility we're going to bounce off of here and come back down and retest. But now that we're up here, I want to move this stop loss, and I have moved this stop loss, and I've moved it to 29.7. So I've taken this to about there because if we break down below this mark, and I don't need that alarm anymore. I'll get rid of it later. Then I'm happy to jump out of this trade. Yeah. Leaving that there. It'll be interesting. I'm not saying we're definitely going to fall down below this trend line, although it's a very important trend line, by the way. We've had like 11 touches or so, I think. And so it was perfectly predictable that we would meet resistance there. Just in the last 4 hours, we see it kind of punch above here. Interesting. It could be an exciting day here as Bitcoin heads up towards these blue lines. And then we're going to have to make that decision when we get there. Are we in, with regards to wyckoff, is this point here, is it merely this bottom or is it this bottom? If it's the latter, we expect to come up, meet those top two blue lines and fly through. If it's here, we're expecting to get up to the top, find resistance, work our way back down for a new low below 28,000. So we want to make sure to be out of the trade if we start heading back down, and we can jump back in down here below 28,000. So that's what we're looking for. That's how that's working. Let me know in the comments below. Are you following along with this trade, and do you like the daily updates about where I've moved my stop loss, where I've moved my take profits, etc.? Okay, so now let's just go with a little bit of news. In fact, let me just do some things here. Okay, as I'm just going to be talking to the camera, I thought I'd change the view here a little bit. So, first of all, let's talk about Tether. Okay, Tether. So a few days ago, before the weekend, I think it was the SEC, I forget who, some three-letter agency at the US government threw some question marks up about whether Tether is fully collateralized or something like that. Threw some shade at Tether. So this is a very interesting thing. I don't trust any of the altcoins in their current incarnation. That includes Tether, that includes USDC, that's Coinbase's version. Of all of them, I would trust USDC the most. But here's the thing. They are not anti-fragile. They are just sitting ducks. If we look back 100 years from now, with 100% certainty, I can tell you they won't be there and something went wrong with them. Right? Do I think it's going to happen next week, next month? Are we in a short-term danger? No, I don't see any of those like red flags yet. But they're fundamentally not as secure as what the blockchain can offer. And so what we will see over time is cryptographically secure stablecoins. So, but don't think the current incarnation of stablecoins is safe. I always hear people say, hey, at the end of the cycle, when we cash out, I'm worried about money being stolen out of the banks, or there being a bail-in. So is it safer to hold Tether? And the answer is no. Tether is no more safe. The reason is, I would say Tether is less safe than leaving your money in the bank. Tether is backed. They used to be backed. They claim they were backed by dollars. They say for every dollar out there, we've got a bank account sitting somewhere with dollars in it, and that's what gives it its value. If that ever had a bail-in and that account got chopped in half, the value of Tether would be chopped in half. But they don't even do that anymore. Tether now has, and they just published this recently so you can go and look at it, but they only have about 4 or 5% in cash available to back the Tether. The rest of it is things like commercial notes. This is things like uni bonds, junk bonds, Apple bonds and Amazon bonds, and maybe they're buying Michael Saylor's bonds so he can go and buy Bitcoin. And there's all these different things. It's like a cash and cash equivalents. It's all this big convoluted thing. Can those things crash in value? The answer is absolutely yes. These things are all backed. The entire market, every single asset class except for Bitcoin, is basically backed by the Fed now. The moment some spokesperson at the Fed hints at the fact they're going to unwind their position, not backstop anything, not continuing printing of money, a lot of those things are going to crash in value, which means Tether will be under collateralized. So there's a question mark there. Okay, so now you understand the problem. What does it mean to the crypto market? Well, there's a couple things going on here. If you're caught with Tether when this crash happens, and like I said, it could happen 100 years from now, but I think it's absolutely inevitable because it's just not a secure system. If you're caught holding the bag with Tether, you're going to get stung viciously. But what's that going to do to Bitcoin prices? Now, what I think you'll find is that as it starts to unwind, there's a lot of people, I think it's like a huge amount of people, the majority of trading is done between a stablecoin and Bitcoin, and not US dollars and Bitcoin. It's important to understand that. And there's a variety of reasons for that. But ultimately, who cares? Like, if you're a trader, all these people using Tether, whatever else, pardon me, they're just using it because they trust it. If they stop trusting it, does it change how they want to make their livelihood? Does it change what they want to do? The answer is no. They'll just start liquidating into dollars. Now here's the catch. See, a lot of people will only have accounts at places that do not accept cash. That's why these things work. So I think I'm just making up exchanges that I don't use. They're real exchanges, but like KuCoin, for example. I'm just going to take a wild guess and say you can't deposit fiat there. You have to have a Kraken or a Coinbase or something. You send your dollars in there. You can buy Bitcoin or you can buy a stable coin. Then you send your stable coin to KuCoin, and now you can trade on all these altcoin pairs. For example, Uniswap is certainly like that, right? So you've got this situation. Once there is some kind of doubt in stablecoin, what you'll see is the stablecoins start being discounted, and all of a sudden it won't be worth $1 like it is. It'll be worth 97 cents, 95 cents, 94 cents. And unless there's some big news shock, which is like, something significant happen, it'll probably just start to fade. Rumors start to float. And all of a sudden there's a little bit of a gap between dollars and Bitcoin. You'll notice the Bitcoin price quoted on an exchange versus a stable coin Bitcoin will be worth more on those exchanges than they are at the fiat exchanges. And what's happening is people are just getting the hell out of stable coins. Like if I jump to Bitcoin, I'm jumping to safety because nothing's going to happen to the Bitcoin. I'm always going to have my Bitcoin. It's not going to fall to zero. The fundamentals that back it are still in place. But the fundamentals that back Tether can go away, and it's the Tether being discounted. So you will notice the price of Bitcoin on those exchanges, or at least on those pairs, start to separate. And there'll become a gap in those two prices. Bitcoin versus dollars, Bitcoin versus Tether, two separate prices. The gap will start to grow. And that will be the beginning of the end for those, for the stable currencies. And it'll be a snowball effect and it'll rise. Now, short term, I think you'll see an increase in the Bitcoin price because of that. People are just getting out of Tether and into safety, which is Bitcoin and other cryptocurrencies. But that will be the short term. Long term, if that snowball actually takes place and Tether just becomes completely untrusted, that'll throw shade on USDC as well and the other kind of stable coins. When you go through that situation, does that cause issues with Bitcoin? Well, here's what it'll do. It'll make the Bitcoin market a lot less liquid, meaning that people will, there won't be anywhere near as much trading volume because people won't want to trade in and out of Bitcoin to Tether, because you'll be in like a depreciating asset even more so than just being in the dollar, right? It won't be trusted. And so a lot of the trading volume will go down. If the trading volume goes down, what does that do to Bitcoin holders? Well, there'll be a certain percentage who will think, oh my God, crypto's dying, let's run. So there'll be some people running from the entire cryptocurrency space because there's a problem with Tether. But there'll also be another group of people who'll be running from Tether to the cryptocurrency space, to Bitcoin. And it's going to be very interesting to see where this plays out, where this wins, where this loses. there'll be some people, because of the shock in volume, there'll be some large players who maybe think, oh my God, Bitcoin has got a whole lot less liquid. And so as a result, it's less safe for me because I hold a very large amount and I thought I could get out and now I realize I can't because the trading volume went down so significantly. That's a possibility. So it's going to be very, very interesting to see this play out. But I think ultimately what will happen is it'll probably zigzag a little bit. Initially, you'll see the price of Bitcoin start to go up as people are fleeing the stable coins to the cryptocurrencies. That can be done very, very quickly. But then some people will try and get out through fiat. That'll take a little bit longer for that to happen. And so that could bring the price of Bitcoin down. But then all those people scared for all those reasons, that will just mean Bitcoin's at a discount and people will start scooping up cheap Bitcoin and then we'll see Bitcoin take off again. So now that might take months or years to play out, but that's ultimately how I see when the inevitable collapse in one of these things happens. So that's my thoughts on Tether. You have that helps everyone understand that. What else did I say I was going to talk about? Okay, let's talk about the hash rate first. Actually, we'll talk about Grayscale first. Okay, so Grayscale. For those of you who don't know, the Grayscale Trust, when you buy units of that trust, for those of you who don't know, Grayscale Trust, it's on the United States. So I think it's the NASDAQ. It's one of the United States big stock exchanges. And they're just a trust, meaning you can buy shares of the trust and the trust will go out and buy Bitcoin, and it's supposed to reflect the price of Bitcoin. It's a way for institutions to buy Bitcoin without actually taking possession of Bitcoin, right? It's an easy way to do it through your Ameritrade account. Okay, that's what Grayscale Trust is. One of their conditions is, because it's a little bit different, they're not allowed to be an ETF, so they came up with this trust model that's kind of like a placeholder for an ETF. You can buy into the trust, but you cannot sell your positions in the trust for 6 months. Well, about 6 months ago, there was a huge spike in Grayscale Bitcoin Trust, in people taking positions in Bitcoin's Grayscale Trust, and that 6 months comes to end now. And so coming up, I think it's in the next few weeks, there's going to be a moment when all of a sudden there's a huge sum of Bitcoins locked up. All of a sudden, they become available for sale, and a whole bunch of people in Bitcoin, in the Grayscale Trust, can all of a sudden liquidate their position, exit their position, sell their Bitcoin, take profits, do whatever. They take profits, take losses, they can do whatever. All of a sudden, well, they're profits because they bought more than 6 months ago. So with that in mind, the question is, there's some rumors floating around that's going to cause, with all this Bitcoin coming on the market that's all of a sudden available, people are going to take profits. So, people are going to close some of their positions. Is that going to put an enormous down pressure on Bitcoin? Look, who knows? Who knows how many of those people are going to sell? Who knows what the buying is going to be like at that point? Are the people going to be, is the buying going to be feverish and buying any little small dip at that point? It all depends on timing of the market. But ultimately, I think people who got involved in the Grayscale Trust, by and large, are long-term holders, and we're not going to see huge liquidations. We'll see some for sure, but I don't think it's going to be huge. But time will tell. Time will tell. We'll talk about this more as we get closer to that actually happening, all right? But I want to give you a heads up so you know what's happening when you see all the headlines about that in the near future. And finally, I want to talk about, what was it? Hash rate. Okay. So what's the hash rate? For those of you who don't know, the way the miners, okay, here's what the miners are doing. The miners are just literally doing a trial and error with a really big long number, looking for a magic number. Like, they're literally just, is it 6? No. Is it 7? No. Is it 15? No. Is it 13? No. Is it 2? Yeah, it's 2. Okay, 2. I just solved that block. I'm the miner who solved it. I get the reward. Except it's not 2. It's just 2 to the power of 10 times whatever, 74. It's just a humongous number. So they're basically, think of it this way: the miners, when they're trying to solve blocks, they're just looking for a needle in a haystack. That's what they're doing. They're just trialing and error numbers. Is it this number? Is it this number? Is it this number? Except the numbers have got like 50 digits, right? It's humongous numbers. So you can imagine, as there are more miners coming online, as they build bigger and better machines to do trial and error faster, then people would start solving the blocks much faster. The miners collectively would start solving the blocks faster as they get more, as they do more trial and error. That trial and error is called the hash rate. The faster that the network collectively is looking for that number, that needle in a haystack, then they say the hash rate goes up. The more people are hashing, the more people are trialing and erroring random numbers to solve that block. Okay, I think you got a picture of how that works. So, in order to not have blocks get solved faster and faster and faster as the years go by, Satoshi came up with a clever way to handle this. Every 2 weeks, he looks retroactively at the last 2 weeks and says, how many miners were looking? What was the hash rate? And then he increases the size of hay so that the number of people hashing and the hash rate will find the needle in the haystack after about 10 minutes. That's where we say Bitcoin has a block solved or average every 10 minutes. That's because every 2 weeks, the algorithm changes the size of hay up or down so that depending on how many people are looking for the needle, they will find the needle approximately every 10 minutes. So typically, over the decade of Bitcoin's experience, the hash rate just goes up and up and up and up and up. Every now and again, there'll be some issue and the hash rate will drop. People will turn off machines. Some machines will become antiquated and they turn them off for some reason. Every now and again, the hash rate will go down. But generally, more miners come on board because the value of Bitcoin goes up, so the value of mining goes up. And technology gets better, so for the same amount of money, you can buy a machine today that mines Bitcoin 1,000 times faster than you could 6-7 years ago. So typically the hash rate goes up and up and up and up and up and up and up. Okay, but because of Satoshi's ingenious method there, the size of the haystack goes up and up and up and up. Okay, what's happening here is that because China has cracked down on Bitcoin, whatever, blah, 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 there's massive amounts of miners who have turned off their machines, put them in cargo ships, and are sending them across to America, and they're going to start mining here. Some's going to Texas, I think, and some are going to some other places. But during this transfer, a huge amount of mining power went away. Just the machines got turned off. And so the amount of mining, right, the hash rate went down because the number of miners went down. The number of mining machines went down. So during this time, the algorithm's going to look back at the last 2 weeks and say the hash rate's dropped, we need to shrink the haystack. Okay? That way, we get the blocks will be mined about every 10 minutes or so. So what's happened in this current period, for this 2 weeks, what's happened is the block times are taking a little bit longer to come out. Like instead of taking 10 minutes to solve a block on average, it's taking 11 minutes, right? Let's stop and pause and look at the robustness of the Bitcoin network. There is this massive migration of somewhere in the order of 30 to 40%, or maybe a little bit less, of the Bitcoin hashing rate is moving from one continent to another. And the only inconvenience that all Bitcoin users experience is that blocks take 11 minutes to solve instead of 10 minutes. That's it. So it's a real testimony to the resilience of the Bitcoin network. A very, very cool thing. So, okay, what's going to happen is the hash rate has gone down, so the haystack is going to get smaller, and then eventually, I don't know how long it's going to take, weeks or months, all these mining machines are going to come over to America and other places, and then they get plugged in, they get turned on, and boom, the hash rate's going to go through the roof. For those 2 weeks, the blocks will get solved every 8 or 9 minutes instead of every 10 minutes on average. And then the algorithm will change, the haystack will get way bigger again, and Bob's your uncle, all of a sudden we're back to on average 10 minutes for every block being solved. And that's it. Should it do anything to the price? Not really. Not really. It shouldn't change anything. Nothing is that significant. For me, it's a little bit of a non-event other than to highlight the robustness of the Bitcoin exchange. Now, one of the, I will point out this though, there is an indicator that I use, that a lot of people use. It's the hash ribbons indicator. And that is probably going to get completely jacked up over this transition period as all these miners migrate from China to here. We might see lots of buy signals. We might see no buy signals. I don't know what's going to happen exactly with that. But look, other than that, but people are smart enough to understand to discount that signal and just not look at it for this period of time. So it's just not really a big deal. So, okay, that is the hash rate issue solved. So there's three big issues that are happening in Bitcoin right now. You're gonna see lots of headlines about it. I hope this kind of clears it all up and makes it really easy for you guys to understand what they are. Is it worth running for the hills? Is it something to be scared of? Look, largely speaking, I think the answer is no. Everything is pretty has some positive, has some negative about it, some more so than others, but everything is very, very manageable, and all of it just speaks to the resilience of the Bitcoin network. All right, guys, let me know. Was all that foundation helpful for you? Did it help things make sense for you? And hopefully you won't get scared reading all the clickbaity headlines saying the sky is falling over the next few weeks, but as these issues come up. Let me know in the comments below. Hit that like button, hit that subscribe button, and I will see you soon. Take care.